Hello everyone and welcome to today's explainer on the Reserve Bank of India's 2025 Master Directions for Small Finance Banks covering climate finance and the management of climate change risks. These guidelines came into effect immediately and represent a major step in India's commitment to sustainable finance and green economic growth. In the next few minutes, I will break down the key provisions, responsibilities, frameworks, and reporting requirements in simple and practical terms. Let's get started. These RBI directions aim to help small finance banks or SFBs understand and manage climate-related risks and promote green financing. According to the document, the objective is to enable banks to carry out comprehensive assessment of climate risk, integrate climate considerations into risk management, allocate credit to genuine green activities, avoid greenwashing, protect depositor interest. These directions are empowered under the Banking Regulation Act 1949. In simple words, RBI wants SFBs to adopt stronger environmental responsibility while ensuring that money labeled as green is used for true green purposes. Applicability and key definitions. These directions apply to all small finance banks in India. Some important definitions include green activities, projects that reduce emissions, improve energy efficiency, enhance biodiversity, or support climate resilience. Green deposit, a fixed-term interest-bearing deposit where funds are earmarked for green projects. Green finance, lending or investing in activities that contribute to mitigation, adaptation, and environmental sustainability. Greenwashing, falsely marketing a project as green. These definitions serve as the foundation for the entire compliance framework. Role of the board. The board of directors plays a crucial supervisory role. Their responsibilities include approving the green deposit policy, approving the financing framework, reviewing annual reports about green deposits and fund allocation. This ensures accountability at the highest level within the bank. Green Deposit Framework A. Policy requirements. Banks must create a board-approved policy explaining how green deposits will be issued, allocated, monitored, and reported. This policy must be publicly available on the bank's website. B. Deposit terms. Deposits can be cumulative or non-cumulative. Only Indian rupees are allowed. No foreign currency deposits. Interest rate, tenor, and rules follow the existing SFB deposit guidelines. No differential interest rate is allowed for green deposits. Premature withdrawal rules remain as usual. Banks may also offer overdraft facilities against these deposits. C. Financing framework. This is a critical mandatory document that must include eligible green project categories, evaluation and selection process for projects, allocation, monitoring, and reporting mechanisms, temporary parking of funds in high-quality liquid assets, up to 1 year maturity. External review of the framework. The bank must publish the framework and the reviewer's opinion on its website. Eligible green activities. According to page 7 to 8 of the directions, proceeds from green deposits must go strictly to eligible green projects. These include renewable energy projects such as solar, wind, and hydropower below 25 megawatts, energy efficiency improvements like LED replacements and building retrofits, clean transportation and EV charging infrastructure, wastewater management and water conservation, pollution reduction and waste recycling, green buildings with certified environmental standards, sustainable agriculture, forestry and organic farming, biodiversity, conservation efforts, excluded projects. Funds cannot be used for fossil fuel extraction or distribution, nuclear power waste incineration, alcohol, weapons, tobacco, gaming projects, large hydropower over 25 megawatts, biomass projects using protected area feedstock. This prevents misuse of funds and reinforces environmental integrity. Third-party verification banks must undergo annual independent verification to confirm that funds were used only for eligible green projects, policies and internal controls are effective, borrower information has been validated properly. External auditors ensure that banks remain transparent and compliant. Impact assessment. Every year, banks must prepare an impact assessment report with the help of external firms. Examples of impact indicators include renewable capacity installed, megawatt hours, GHG emissions avoided, tons of carbon dioxide equivalent, waste diverted from landfills, energy savings, new clean transportation infrastructure built. If impacts cannot be measured, banks must disclose the reasons and corrective timeline. Reporting and disclosures. Banks must upload the following on their website each year: third-party verification report, impact assessment report. Additionally, within 3 months of the financial year end, the bank must submit a board report detailing total green deposits raised, projects funded, amounts allocated, verification, and impact reports. The RBI's 2025 directions create a robust, transparent, and accountable system for green financing by small finance banks. These guidelines will not only help mitigate climate risk, but also support India's transition toward a greener, more sustainable economy. Thank you for watching. If you found this explainer helpful, don't forget to like, share, and subscribe for more regulatory insights. Munses and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support, and handling compliances, risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BATF, and ancillary regulations, and fintech expertise in customs, clearance, for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.